it's inevitable that we'll see a crash. The winners, like the MicroStrategies, the Metaplanets, I expect them to persist and to continue to provide this service for a certain period of time, maybe 10, maybe 15, maybe 20 years. But at some point, they're going to have to update their own strategies because, again, I think these regulatory barriers that make these capital pools trapped will eventually kind of go away. And then they have to ask themselves, like, what is the service they really are providing, right? Who's going to continue to provide them capital to go buy Bitcoin? I believe at some point there's not going to be that capital available to go do that. Yeah.
It's almost like the ICO boom in 2017, where I mean it's different, of course, but like there might be some similarities where more and more companies come up, but there's only like really like maybe like a few handful of companies that actually can do that long term and profitable, and the other ones need to, as it makes sense, provide a good product or service to the market. But I actually like the way how you phrase it, and I never heard that as a service to put trapped capital towards Bitcoin. And this is a service that Saylor is with Strategy is now doing. And I've never thought about this as being a service, not just an arbitrage, because you actually do that. And we have that nice picture where we have like 300 trillion in the fixed income market, like 200, 500 trillion. What is it in equity? I think also 250, 300, a big chunk of money also. And basically there's a lot of trapped capital that couldn't flow to Bitcoin outside of those products. Mm-hmm. I think Saylor mentioned it around like 97% of the capital. Like it's a huge amount of money that actually is trapped and couldn't flow to Bitcoin directly. So we need those pipes towards Bitcoin through Strategy, through Stretch and all those financial instruments from Strategy, and other companies also that do that. So I like it. It's just a very interesting era that started in Bitcoin, where we now have like the financialization and all that financial games that Bitcoin previously completely hated on. Like if you talk about like 10 years ago, the Bitcoin ethos and like against the big banks, against the big financial institutions. And now we're using exactly those pipes, exactly those financial games to actually pour capital more towards us. It's an interesting development. I guess it was a natural progress that anyways would have happened.
Yeah, exactly. I mean, I think that's what I was mentioning a bit earlier, is that I think that's the only way Bitcoin could actually get the wealth that exists in the world today into the Bitcoin network. It needs to kind of integrate into the existing system. I think it's a bit of a libertarian's utopia if it could have just been, okay, only individuals will accumulate Bitcoin ever, right? But I think we need these constructs from the capitalist society to persist. I think we can't, the wealth needs to, that's my perspective at least, right? It needs to, there are valuable constructs and systems, I guess, in a way. Systems is not the right word, but like, let's say, when you think about the corporation as an instance, the stock exchange, these types of things, they're still valuable in a Bitcoin world. And the wealth that is currently being stewarded by corporations, by fund managers and so forth, that is still like real economic energy that has been kind of generated through the past, right? That also needs to ultimately kind of migrate into the Bitcoin system. I think it's the only way it could have happened. And I think I like your analogy of kind of talking about pipes. I tend to also use them as like roads or highways, right? We kind of need these conduits to be able to do the migration, the transition of the wealth from one system into the other. But I can also see the other side of the coin, which is saying, are we not compromising our own ethos to a certain degree as Bitcoiners for this? And that's why, again, I think the yin yang analogy is kind of interesting. It's kind of like, it's not just one thing eating the other. It's like they're both kind of eating each other simultaneously.
If we stick with the pipes, then strategy is a financial plumber.
Yeah, totally. It's a massive conduit, right? The ETFs as well are like just a massive, massive one.
And then the ETFs is basically a toilet where we need to get the Bitcoin towards somewhere. I think the comparison is horrible, but if we stick with that picture, maybe pipes and maybe roads and streets are actually better and highways than pipes. You mentioned, and I don't want to forget that you mentioned that Bitcoin is a true cost of capital. What do you mean by that?
Yeah. So to kind of come, like, I think where we've as Austrian economics, we've kind of recognized that the cost of capital, cost of money, of borrowing, of interest rates should be set by a free market, and we've been kind of in a essentially controlled system for a long time, right? At least since 1971, and I mean, arguably even before that. And there's been this like incentive in my mind, especially when you're in like geopolitical conflicts or rivalries, to when you have a fiat-based system where a money supply can be manipulated and the cost of capital can be manipulated. The two are, of course, I think, interlinked. As you reduce interest rates, create more credit. There's an incentive to kind of outperform your rival through running your economy hotter to kind of reduce the cost of capital below where the free market would have otherwise set it. And it's been getting kind of worse and worse. If you look at the trends since the 1970s, the interest rates have been going lower and lower, and in periods of time have been actually negative. And what this does is it kind of ends up creating situations where people are misallocating capital. There should be like the true cost of capital, and then there's the kind of the manipulated cost of capital, which tends to get driven lower. And investments that are kind of made in this band between the two are actually value destroying in real terms. They might be making positive gains as measured in fiat, but they're value destroying from a kind of a theoretical perspective, right? And not just theoretical, it's happening in practice, but we just can't see it because the numbers and the units of account that we have are bogus in a sense. So what this has kind of done to our economy is we've created a lot of basically zombie companies that aren't delivering real value to the economy, oversupplying products, oversupplying and overconsuming, right? All this sort of stuff ends up becoming a downstream of a manipulated cost of capital. And the way I sort of see Bitcoin and the fact that it's gaining so much each year as measured in fiat. Not every year. There are years that are down, of course. There's still cyclicality, but let's say on every 4-year period, it's in recent years been 40 to 60%. That is dictating what the true cost of capital needs to be able to get us back down to to kind of where the free market would set the rates. So because we've kind of been under for so long, manipulated, this is now coming in and being the actual truth of what the capital should be doing. So what we're seeing kind of happen, and to me it's not happening in a very predictable way, but the capital that would otherwise go towards value destroying in real terms, allocations or investments, is instead going into Bitcoin. And it's beautiful in a way because people can follow their own, even those who are still measuring in fiat, see their fiat number go up if they allocate more of their capital into Bitcoin. So this is to say that there's probably a lot of companies and investment opportunities and stuff that are getting funded today or have been getting funded in the past that probably should not be getting funded. Our economic activity should actually be a bit lower. People should have more free time and working less. But haven't, because there's been this kind of lack of true cost of capital being shown to us. So the migration of capital is happening, and people are incentivized to do that through just seeing their fiat number go up. And in the process, the wealth is being migrated, but then also over time, the hurdle rate that Bitcoin is going to come down as well. And then more investments will get over that hurdle rate over time, right? So it's going to be this kind of like gradual sort of reduction. But in practical terms, very few things typically make it over 40% rate of return. Big tech companies certain investments might, optimization efforts within a current business probably would be that are like low capex intensive things, certain software businesses. I'm sure Nvidia and like some of these really big companies, Amazon and others, are probably competitive to that, but a lot of other stuff is probably not. So so I think the companies that recognize this sooner and react to it sooner and apply it to their own, the capital that they manage, stand to benefit as measured in Bitcoin. So they will start making their lens. I want my Bitcoin reserve value to grow, and that would probably actually necessitate less investment in their core business in many cases. So it sounds a little bit counterintuitive, because I think usually within our current system we think we need to do more investment, more stuff, hire more people, do more things. But the right thing I think right now is actually, no, we need to kind of like suck the unproductive capital out of the system and put it into Bitcoin in most circumstances, and actually reduce some of our economic activity. It becomes a little bit, as I mentioned, like a conflict, because when there's competition with another, within geopolitics, there is this incentive to do more stuff and to run your economy hotter, especially if you're like investing in military technology and tech races, arms races, space races, whatever the race with your rivalry might be, or with your rival might be. In this case, U.S. China are kind of a big one today. There is that benefit of yes, the trade-off is you misallocate capital in a lot of different facets, but you might get some gems of R&D discovery as a result of that. So I think that's going to be one of the major dilemmas we're going to see, is that governments are going to want to continue to kind of like invest and sacrifice the misallocation of capital, the depreciation of their own currency, so in order to maintain competition with their or exceed their rival in terms of tech development and other things. So sorry, I went all over the place again, but hopefully I answered the question.
I think it's very fascinating how you think about those things. Like I came from stock investing. I saw Bitcoin and I slowly got orange pilled. Within a year, I went all in. Like I was just like, I started investing in stock. Like I had stocks for years. Then I saw Bitcoin and I went all in within like a year, sold everything and just put everything in Bitcoin. And now this has been the case for, I don't know, 3 years, 4 years already. This space where I'm like, okay, to what CAGR has Bitcoin to come down for me to actively look again at other investments, to say, okay, 20% or 30% of my Bitcoin capital, I might want to reallocate to other stuff. Where right now I don't want to do that at all. Like I don't even look at treasury companies. I just like, I'm 100% in Bitcoin self-custody. But maybe at some point there's like, okay, yeah, there's a company that has a really cool product and a service, and they're also holding Bitcoin on their balance sheet. So I'm not losing my Bitcoin directly, and I'm benefiting from them growing in the future with their product and service. So this cost of capital and this hurdle rate is really interesting. And I'm really curious, like when I get back into this game of investing in companies. I mean, a little bit I do with my own company, but like that's a whole another thing. But yeah, that's an interesting thing, where when does publicly traded companies or maybe private equity deals that are available for publicers, that for maybe like a lower entry price, become so compelling again to actually make the move to sell some Bitcoin, because you have a lower cost of capital when you live in this Bitcoin world. So I find that fascinating, and I don't see it anytime soon, but I see it coming at some point.
Yeah, totally agree. And I think where I'm at right now a little bit is like, I think there are instances, having done some analysis, right? I think there are some companies out there that, again, if they were to rethink and apply Bitcoin as their own internal cost of capital, could generate more Bitcoin for their investors than had the investors just gone out and bought Bitcoin. and finding these opportunities right now. And I don't think there's necessarily that many of them all over the world, but I think they do exist. But again, it's not what, if you were just to invest in a gold mining stock today or something, and they continue doing what they're doing, it's not going to beat Bitcoin. But if they were to change their capital allocation internally, there's some instances where maybe they could beat Bitcoin. But you're right. I think over time, I think the other interesting thing is like the Bitcoin hurdle rate will come down, but in the process, a lot of corporations will then also apply like Bitcoin as a treasury asset, right? So kind of the two things will kind of move in tandem in a sense. Yeah.
It seems that a lot of those price movements right now, and we have been up 70, 80%, something like that in the last 12 months, come mostly from treasury companies, from companies for institutions. Of course, retailers was also buying, like I'm retail, I'm buying, so all those things. But mostly it's driven by bigger corporations, and you see that in like the buying volume what they are doing, and also in the retail interest when you see like Google Trends, YouTube search, and like all those graphs. Kind of, how do you think like the broader adoption to Bitcoin is now coming in the years to come? As right now, when I go out and go in the normal world, people really don't care that Bitcoin is over 100K, which is fascinating for me because I thought 100K is that kind of big step.
Yeah, again, I think it's a bit antithetical to the Bitcoin ethos, but I think the way it seems to be going, at least presently, and maybe things will change that, but I think people will be getting their exposure without them even knowing it. They're going to, when strategies in the S&P 500, everybody that has the S&P 500 index has some indirect exposure to Bitcoin. As pension funds begin to buy the ETFs and put that into their asset side of their fund, all the people in that pension fund will have indirect exposure to Bitcoin. So I think it's a bit unfortunate because I think the proportion of retail people and everyday folks who do self-custody, I don't think it's going to grow as fast as those who get their Bitcoin exposure indirectly. That being said, I hope that for younger people, and I don't know what the stats are on this, but I hope that Gen Z and younger people are educated on the importance of self custody, yeah. I mean, on the flip side, though, I do think custodians are becoming more reliable than they were in the days of Mt. Gox and certainly FTX. So potentially, there could still be situations where there needs to be a trusted intermediary, but where that trust is sufficiently strong and respected to justify people having kind of Bitcoin bank accounts, something like that. But I think definitely the direction of travel right now, I believe, is that retail everyday people are going to get their Bitcoin exposure without them even really knowing it.
That's the indirect Bitcoin adoption. Is there? Do you see a group of people, an industry, a segment, or whatever, in whatever direction you want to go with that, that is like most blind to Bitcoin right now?
Well, blind or maybe seeing it through the wrong lens. But I'd say definitely I have friends that are economists, like classically trained economists, and definitely the discussions I have with them are it's very, very frustrating because they're definitely seeing things in their Keynesian thing, and they cannot break their paradigm, right? And it's quite frustrating. Because you'd think that they speak the same language in so many different ways, but yet it's completely upside down for them. They cannot really escape that view. So I don't know if it's necessarily blind. I mean, the way I think of blind, I think people who just like don't even know it exists, I guess. And that I do sense the sense that anybody I talk to at least knows that they've at least heard of Bitcoin. They might not fully understand it or even understand it at all, but I think there's still definitely the vast majority of people that I kind of speak with are misinformed about Bitcoin. And some are just unwilling to listen. But I would say, I have friends who have in the last year or so, who want to authentically learn about Bitcoin now. I'm starting to kind of buy courses for my friends and stuff. And, so there's some Bitcoin educators out there that work specifically with individuals. So I'm buying courses for friends as like gifts. I've tried to kind of buy like my family members' hardware wallets, but it's just like I don't live in the same city as them, so it's kind of like ends up in their desk somewhere. I'll get it set up, but then they don't necessarily continue to use it. So I think these kind of educational courses are maybe the better gifts these days. I'd also say like older folks. I think even those who do maybe get it, definitely folks like my parents who are retired, it's difficult to get too much exposure for them because they still are feeling like, oh, I need to get my cash payment every month to live on, right? And Bitcoin doesn't provide a cash yield. So again, that kind of like that acceptance that you're going to get your return through price appreciation as opposed to through yield is a pretty big hurdle for I think pensioners and retirees.
Interesting. It's so hard to like it's you said frustrating, but it's also at the same time it's why the asymmetric bet exists, right? Like if everyone would get it, and if it wouldn't be frustrating the orange pill people, I guess it would be boring, and we would already be on the top of the hill and not at the starting point.
Totally.
It's good and bad.
Yeah, and that's what makes it exciting, right? Because this is not going to be an instantaneous shift; it's going to be a gradual one, and that's I think in many ways it's good that it's happening that way, but it's just unfortunate for the people that don't react soon enough. That's the downside.
Who do you think will benefit the most from a Bitcoin standard?
I mean, I think the people who are getting screwed over the most in the current system are the ones that will benefit the most. So I think that tends to be less affluent working class folks who are just really struggling to get by. I think those are the people who would benefit the most if they were to adopt Bitcoin now. I think once we're fully on a Bitcoin standard, as I mentioned, it's kind of like it'll be kind of boring in a way. But I do think as we go through this transition, there's an opportunity to see a pretty massive shift in who owns and controls the wealth, right? Those individuals who are early adopters are getting a larger proportion of the wealth in the new system. And the same could be said for governments, corporations, and so forth, right? So again, if we look at corporations within any given industry, the company that's willing to kind of make that move first before the others do is the one who can emerge on the other end of the transition as the most well-capitalized industry leader. They'll be set up by so many advantages simply because they have such a large balance sheet to kind of work with. So I guess who benefits the most is going to be the ones who are bold and risk-taking and willing to kind of go against the grain early and take that risk. Yeah. And I guess the really cool thing is, again, the MicroStrategy story is it's a little bit of like David and Goliath kind of thing, right? Like, MicroStrategy within his industry, he's kind of like the David. Microsoft is like the Goliath. And if we fast forward 15 or 20 years, it could be that MicroStrategy is buying all the worthwhile IP and assets out of Microsoft because they made the move to Bitcoin while Microsoft didn't. So there's an opportunity now for the little guys to really like get ahead, but they have to be willing to kind of take the risk still.
Which is frustrating in itself for me because, and that's why I asked the question, because I see also the same that you see, those who have it the hardest and get screwed over the most from the current system are the ones that should own Bitcoin, but those are the ones that usually don't own assets and the ones that anyways just save in dollars, and those get screwed over the most. If you have anyways assets a lot, you don't get screwed over that much. If you have like real estate, you have stocks, if like I have equity and all those things, you still get screwed over, but you at least have assets and those rise with it. And those who are bold and going against the stream are usually also the ones that are kind of doing okay anyways. Like they're the ones that they're the ones that innovating, seeing for other options. They're like, if you do exactly what the mainstream is doing and you're doing exactly opposite what the mainstream is doing, you're usually doing quite fine. It's like it's that weird law, but there's also this what if we land in a Bitcoin standard? So not the way to the Bitcoin standard, but what if already everyone is in a Bitcoin standard? Then it's definitely like that the ones that are now screwed over the most are then benefiting the most. So that's I think an interesting perspective. Also had an interesting question once coming up on the podcast, an ethical one. If you tomorrow wake up as a new person and you don't know who you wake up. You might be Jeff Bezos. You might be a kid in a Nigerian slum. So you don't really know where you wake up. You just know like you will be randomly assigned to a new person. Would you rather wake up in a fiat world or in a Bitcoin world? And then it's like, yeah, like if I don't know who I am, I rather wake up in a Bitcoin world because there's like more fair chances and more access to the banking system with like Bitcoin, because Bitcoin in that point is the banking system. And if I wake up as Jeff Bezos in a fiat or Bitcoin world, it really doesn't matter. If I wake up as a poor kid in Africa in a fiat was a Bitcoin world, I definitely matters if I wake up in a fiat or Bitcoin world. So I don't know.
Certainly great. I mean, I think it's a much more fair system. I think that's the beautiful thing about it. It's, as you said, ethical. I mean, Bitcoin at the end of the day, before it's anything else, I think it's like really a moral and ethical system as well, right? Compared to what we currently have. So anybody, regardless of kind of where their lot is in life, as long as they kind of like spend less than they earn, are able to benefit and grow their wealth. Which is just not the case in our current system. People who are struggling to get by, even if they do save, they might still be falling behind.
Thank you for watching this video. This was only a snippet of the podcast, and if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.